Okay, so what did you guys come up with?
40,000.
40,000? So Kelly's got a 40,000. See some heads shaking. Anybody else get something different? All right, Kelly, how'd you get the 40?
I just added all of the expenses and subtracted minus the total cost, the total revenue.
Okay, so we got expenses of 50, 200, 110 equals 360, 400 minus 360 equals 40?
Yeah.
Okay. So 400,000, I'm going to put a little K there for shorthand, minus 360,000 equals 40,000. All right. Anybody get anything different? Okay, yeah, you want to do something with the 35. What do you want? You're asking. Okay, that's fair. What do we? The professor owns the business, and from the professor's standpoint, it's making 40,000 in his pocket, in his hand. He's getting the 40,000. So from his perspective, it's fine. But if we started to treat the business and the professor, is this really reflecting how the business is doing? Is the business making 40,000? Right? Try to strip the business, kind of treat the business as its own entity, its own thing. Is it making 40,000? Can the business operate without a manager? No. And it can get a manager if we kind of put blinders on and say, well, we got to run this business. Maybe we've got 35,000 that needs to be allocated to look at the profits of the business, right? So that is our accountant. Brad, you might be. Are you thinking about accounting at all? Are you in accounting or?
Yeah, I've got it before this class.
Okay, you got it before this class. So it was right on your mind. All right. Then I know Shane was in there. Maybe some of you others are in Professor Wagner's accounting class. All right. So the accountant might take this and say, "Wait a second. We gotta account for this differently, because yes, this is what you're doing for profit. But if we think about it for the business, we might take a different approach." So the accountant, maybe I'll write this out. Accountant might look at this and say, wait a second, 400 is fine, I get the 360, I get where that's going, but if we think about the business, I want to add on that 35,000 so that the business is making 5. And maybe this needs to be done for IRS tax purposes, right? Maybe the business gets some tax credits or benefits or subsidies or something, something to do with the tax rate for businesses might be different than the tax rate for the professor. Who knows, right? The government comes up with all kinds of crazy things that go on that we might have to rely on the accountant to keep track of IRS changes and whatnot. And so the business made 5. Now, who got paid this 35? The professor, right? So the professor's like, you know what? You guys do all the hocus pocus you want. I know at the end of the day I made 40, right? And so, if you got to do this for the IRS, fine, but I know I made 40 doing this business. And so the accountant says, fine, you get paid 5 here through the business profit, and you get 35 as income for managing, and we're both happy. Okay.